The legalization of recreational cannabis across many US states has opened the door to an entirely new industry, one filled with opportunity, risk, and a host of legal gray areas. And for property and casualty insurers, it's a fascinating and complex challenge. Today on InsurKnowledge, we're diving deep into how P&C insurers are responding to the rise of recreational cannabis, what types of coverages are being offered, and what the future might hold as the industry matures. Let's start with the basics. Cannabis businesses span a wide value chain from cultivation and harvesting to processing, testing, distribution, and retail. And just like any other business, each link in that chain comes with its own risks that need to be insured. For cultivators, standard property insurance is just the beginning. These businesses may need crop insurance for cannabis plants, equipment breakdown coverage, business interruption, and liability coverage for visitors or workers injured on site. But unlike traditional farms, coverage for cannabis crops isn't widely available through federal programs, so insurers offering it are almost always working in the surplus lines or non-admitted market. On the distribution side, transporters of cannabis face inland marine and commercial auto exposures. If product is stolen or damaged during transport, or if there's an accident, that's a liability that needs to be covered. Many cannabis companies have to find bespoke solutions or work with MGAs and specialty carriers who understand the risks of moving cannabis products across state lines where laws may vary. For dispensaries, the most visible part of the cannabis value chain, there's a need for general liability, property insurance, theft coverage, employee dishonesty, cyber liability, and product liability. Many carriers exclude cannabis-related products from their standard forms, so finding tailored coverage is essential. There's also the challenge of cash-heavy operations, since many cannabis businesses struggle to access traditional banking systems, making them high targets for theft. Then there's the product liability piece. If someone gets sick from a contaminated batch, the retailer, manufacturer, and cultivator could all face legal action. But since cannabis is still federally illegal, the regulatory environment is a patchwork of state-level laws, creating uncertainty for underwriting and claims. So where do P&C insurers come in? The surplus lines market has been leading the charge, with specialized carriers and MGAs developing programs specifically for cannabis businesses. These carriers have been innovating by underwriting based on local regulations, operational maturity, and safety protocols, often requiring detailed risk inspections before binding coverage. One of the lingering challenges is the inconsistency between state and federal law. Since cannabis remains a Schedule I substance federally, many insurers, especially admitted carriers, won't touch the space due to the legal exposure and reinsurance complications. That means pricing tends to be higher, coverage is more limited, and capacity restricted. Now, let's talk use cases. Some carriers have developed insurance packages that combine multiple coverages: general liability, product liability, property, and cyber, tailored specifically for cannabis operations. Others offer coverage enhancements for things like extraction equipment, indoor grow lighting, and even professional liability for cannabis testing labs. There are also creative new risks emerging. What happens if a dispensary's customer uses a cannabis product and then causes a traffic accident? Could the retailer be held liable? What about testing errors that mislabel potency or contaminants? These issues are becoming more prominent as the legal system evolves and cases make their way through the courts. Looking ahead, we can expect the following trends. First, if federal legalization happens, or even banking reform like the SAFE Act passes, it could unlock a wave of interest from admitted carriers and reinsurers, opening up new capacity and lowering pricing. Second, insurers will likely invest in more refined actuarial models, better risk scoring systems, and expanded claims data to price cannabis-related risks more accurately. Third, product diversification will increase. As the cannabis industry matures, look for more tailored policies to emerge for specific segments like cannabis tourism, delivery services, infused food and beverage production, and industrial hemp. Finally, compliance and regulation will be critical. Insurers will need to keep pace with shifting state laws, new federal rules if passed, and evolving best practices around security, testing, employee training, and operations. Cannabis insurance is still in its early stages, but it's a rare example of a brand new insurable industry being built from the ground up. It brings together legal, societal, and economic complexity, all within a high-growth market. For professionals and students interested in risk, regulation, and emerging markets, this is one of the most dynamic areas of insurance to explore right now. If you enjoyed this video, be sure to like, subscribe, and follow InsurKnowledge. We publish new content every week designed to help you better understand the world of insurance, from the basics to the cutting edge. And if you're curious about cannabis underwriting careers or how MGAs are innovating in this space, drop a comment below. We'd love to hear from you.